Hey everyone, coming at you live from the BGW Broadcasting Studios and Shumaker Studios as well in Charlotte, North Carolina. And hey, this is a great day, right? Because first of all, I just did a Spectrum speed test and Spectrum is still working, so they haven't kicked me off yet. Our yard guy just finished up, so I don't have to hear the mowing and you don't have to hear it either. Judgment Day has been delayed. I mean, good grief. On Tuesday, it was supposed to be today, and now it's been moved back to the 14th. And then, hey, we got Jack and Adam back again. So it's a great day. Oh, and also, when you start hearing Jack talk, you're going to see that he is in the palatial offices of Shumaker. And since I don't have a virtual background, I'm going to just do a shameless plug right here. This is BGW, and this is my virtual background, right? So, anyway, I'm going to go ahead and tee off the first question that we've gotten, guys, and then you guys can take it where you want to go, all right? So here's the first question. You guys ready to go first of all?
Yeah. Is it okay if I hop in on one point that we got yesterday, Gary?
Sure.
So this is specific to the construction industry, but I just really thought it was, spot on. We got... That's funny, Joe. Probably not. So we got an email forwarded to us that was a position statement of travelers insurance, specifically to their bonding program. And it was related to this whole concept of, did I have access to other resources or not? And what I loved about this is it was the guidance was so on point. I ended up forwarding it onto several of our other construction clients, even though they don't necessarily use travelers for their bonding. But the core premise was, look, at the end of the day, we're a creditor too. Whether you end up using us or not, we're a creditor. And frankly, this whole thing about, if you had a line of credit, you should have used it, is completely the opposite of what we believe. We do not like it when construction companies use lines of credit for operating expenses to the extent that it harms their profitability or liquidity. And in fact, that would mean that we would be less likely to bond you if that was the route that you went, or at least reduce your capacity, because at the end of the day, it means that we've got some more risk because you have less liquidity. So, and that was really point number one, is that, hey, that's really interesting, but also understand that had you done that, that would have had a negative consequence with respect to your bonding capacity, which I think for a lot of construction companies is equally, if not more important than any type of bank line of credit, because a lot of the financing they're doing is all equipment financing via whoever the underlying dealership is. So the second point that they made that I thought was extremely interesting is, or at least spot on, is that, look, in construction right now, you're not feeling it because you're blowing through backlog, but you will feel it because you're going to have reduced demand coming up, is our core fundamental belief. So of course you needed it to make it through that downtime on the other side. So I thought it was just really good of Travelers to put out something like this. And I think, Martin Plaza was the guy that sent it to me, that, really, started off saying very distinctly, hey, we can't offer legal advice, so we suggest you speak with your attorney, but here's what we think. And I just thought, man, way to take a stand from somebody who's kind of a pseudo bank and get it out there. So it was reassurance that that I think that we're not crazy in our line of thinking that we're doing here. At least somebody else from a very large organization believes the same thing.
Love it. Jack, did you have anything that you wanted to launch into before I get into the first litany of questions?
Well, actually, yes, and this may come up as a question, so go ahead and answer it now, which is, There was an article that was published this morning in the Charlotte Business Journal, the online version, and it was a discussion about our North Carolina Attorney General with other Attorney Generals, apparently is 23 other states that are looking into what can be done differently now and in the future, potentially with the next round of funding when it comes about. And so there's some things that are obvious, but what they're asking for, and I don't like to read off of things, but I'm just going to go through the bullet point list to be concise, but obviously the publicly traded companies that are on the radar. So obviously the SBA should have to deal with that. Eliminate lenders' ability to provide preference to existing business customers in order to stop the appearance of favoritism or impropriety. I know a lot of you have experienced that. Either you didn't have a relationship with a bank or you weren't of their more favored customer list, so you got kind of pushed a little bit down. At least our clients have experienced that. Process loans on a first come, first served basis. The SBA should provide clear guidance to lenders concerning how to provide information about the process to both new and existing customers and what additional types of help that those banks can provide. Setting aside a portion of any future funding exclusively for minority-owned small businesses which do not have a long-standing relationship with banks. Releasing future funding in a manner based on metropolitan statistical areas, so MSAs, weighed by the number and size of small businesses located in those areas, allowing applicants to access a centralized portal maintained by the SBA so they can track the progress of their loan without having to go through each submitting bank's portal. Offering small businesses that have already been forced to lay off some employees, bringing them back within the time limits currently set out in the program. So that's a key issue. And I assume that there'll probably be questions about the fact that you have that 56 days, 8 weeks, but we're now within, that time zone as of June 30th. So there's going to have to be some further interpretation of what that means, possibly extension. And so I think we should be expecting that. And then requiring the SBA to disclose more granular data regarding the amount of loans processed by each lender, et cetera. And then the parting comment of this article was, we understand it was necessary to implement the PPP as quickly as possible, which led to predictable stumbles and delays given the size of the program. But we can now learn from these mistakes as the program moves forward and we can apply those lessons. So I think, and thank you for indulging me reading that, but I think that's where we thought we would be at this point. And we've seen that as of today with the extension by 1 week of the day of reckoning. So there will be more to come, more interpretation, I think, extensions of time just to match the reality of the fact that people have not received their loans on a timely basis, as was expected when these rules were set up for these programs.
Yeah, and I think related to that, what I touch on that I also thought, I'm happy that they came out with this guidance is that, every other webinar that we've had, we've said, hey, you got to get the belly button count. People wouldn't come back off unemployment. That's going to be your problem. They did issue guidance as well that said that as long as you make an offer to have somebody come back in writing, that's key, and that they reject you in writing, that's also key. That's going to count towards your FTE count. And they also put kind of a little thread in there and could impact their future unemployment claims. Again, that probably would be up to you to dispute their eligibility for unemployment at that point within the system. But they did acknowledge that there would be some people who don't want to come back off unemployment, and that you should not be penalized for that. So I thought that was pretty good. So add that to the list of documentation to start pulling together, because I think that the piece that I struggle with is and get back in writing the no, just based on the demographic of some of the people that would have been laid off. It's like, how are you supposed to get something back from them in writing? If you don't have their email address, as an example.
Yes.
All right, before we launch into the questions, I just want to, because we've got 141 folks on here right now, and it continues to add a little bit. So Use the Q&A to issue your questions to us. That way we log them. Don't use the chat for that. And thank you for those who have provided some humor for us already this morning in the chat. So here's the first question. And it's actually a number of them. So this is from Greg. I have a holding company, LLCs that my companies pay rent to. The rent amount covers the loans with only a few $100 each month to spare. South State Bank alluded that only the interest related to the loans are forgivable, but all that I have read, the entire reasonable rent payment, even to a related entity, is forgivable. Is that correct? Can you clarify?
Yeah, there's nothing in the current guidance that says that if you're the landlord, you're penalized. So I think all that our recommendation has been is, hey man, don't modify the rent structure just to try to get to your 25% number. So what South State may be confusing is that interest, had the building been owned by the operating company, then yeah, only the mortgage interest would have been applicable. But in this case, it's not. It's in a separate LLC. So whether I'm the landlord or you're the landlord, really shouldn't matter in this case.
All right. So Greg has a couple more questions here. The next one is, how will 6 months of SBA loan payments on my behalf be accounted for in the financial statements and then on the tax return?
We don't know yet, but we're assuming it's probably going to be another income item in the financial statement, and then probably a permanent book tax difference in the tax return. Because you're going to have, if you just think about the M1 on a tax return, it's going to have book income, which would be inclusive of your other income associated with the loan forgiveness, but then it's going to take it off for the tax return, very similar to how accelerated depreciation works.
Next question is, how will PPP forgiveness be accounted for in financial statements and IRS?
We think it's probably going to be the same thing.
And then the final question from Greg is, how will the $10,000 SBA grant, I'm assuming that's EIDL, be accounted for in financial statements and IRS?
Again, same concept. You've got another income item that is not taxable, and then again, the verdict's still out on whether or not you're going to be able to deduct the expenses. There is movement to fix that in the next go round of legislation.
All right, this is a request from David, who's in the construction industry, and I have a feeling that we'll have others that will want that as well. He wanted to know if we would be willing and able to forward the letter that you referenced from Travelers. I don't see any issue with that, do you?
No, I mean, I already told Martin that I forwarded it on to some of our clients. So I think, forward it on or otherwise publish it on the website. I don't see a downside to that.
All right, cool. So David, I'll send that to you. I've got your contact information. If somebody else wants it, feel free to hit either my email at gfrey@trustbgw.com. Again, gfrey@trustbgw.com, or FAQ@trustbgw.com, and we'll make sure that's done, and we'll look at and see if we can get that hung up on the website. All right. So you guys ready to rock and roll with another round of questions here?
Yes.
All right, here we go. This is from Jennifer. Good morning. We received our funds yesterday. We're paying payroll for the pay period of 4/19 to 5/2. Does this payroll count towards the loan forgiveness?
We don't know yet, but we're going to assume that it does, since we believe it's cash basis accounting.
All right, this is from Mark. How do I calculate max compensation per person? 8 weeks divided by 52 times 100,000 equals 15,385. Does it matter how or when any of it's paid during the 8 weeks?
That's somewhat related to the preceding question in terms of how or when it's paid. We don't know. So our general advice has been, be prepared to pull some levers as further guidance comes out, I'm optimistic. I'm hopeful that at least in this gap period that they talked about between the 7th and the 14th, with the 14th being the new day of reckoning and some guidance coming out, that guidance may help us interpret what's going to be allowable in the forgiveness calculation itself, but maybe not. And then the second question was related to how do I calculate the max? I mean, yeah, the weekly route, works. Technically, you could do a daily route, which would arrive at a different answer. We just don't know yet. So using your best guess right now, which is around that 15.5 number, is as good as you can probably get at this point.
And I would reiterate just that the things that you've said in the past on these calls, which is the documentation aspect of it. And so, we talked a lot about that on Tuesday, about the documentation with respect to showing the necessity component of the loan and your needs as a business, but also in this aspect. And I know that the question I've been asked, should I set up a separate bank account? And I think you guys in the past have said, well, not necessarily. You don't necessarily need to go through that process if you have good record keeping. I think in this day and age, it may be easy to just even online to set up a separate bank account and move that money over into that. But regardless, you just need to account for the money coming in and what you do with it going out in order to show that it was used for a proper purpose.
Yeah, and related to that, just be prepared. If you gave somebody a raise to get to that number, be prepared that at some point you probably would need to support why that raise occurred. Maybe not necessarily for the forgiveness component itself. I mean, I don't know if there's going to be a scenario where they say, well, show me what they made before, show me what they make now. But if someone did come knocking, that's what I would look at if I was knocking.
This is a follow-on question from Mark. If payroll exceeds 75%, but with rent, utilities, et cetera, you only hit 85% of PPP, is total PPP forgiven, or just the 85% that you can show spent forgiven?
It's just what you spent within the confines of the parameters that we've talked about a million times now.
All right, this is from an anonymous attendee. Signed loan papers on EIDL loan 18 days ago. Any idea what's going on?
I can't speak to how long it takes to get funding. Do you have any experience in that one?
Yeah, so it varies, and I'm kind of the same with you guys. Different clients are on a different timeline, and I'm trying to figure out the rhyme or reason. I've been asking, how long have you been banking with the bank? What is your relationship, SBA relationship? What's your credit? I mean, just kind of the parameters to try to create some sort of objective pattern of behavior. And I haven't been able to uncover one. So I just would suggest that maybe talking to, whatever the conduit was for you to seek that loan, that you seem to just inquire and be a squeaky wheel, essentially.
Yeah, I think I also haven't found any rhyme or reason to the amount of the loan either. So if anybody knows, let us know.
This next question is from Michelle. Regarding PPP, can the loans be forgiven? Your website says loans offered through the program are forgivable if they're used for the intended purpose. What will the business need to show or prove that their PPP is forgiven?
I think we've hit that with some of the documentation literature that we've sent out. I mean, you're going to need to prove that you spent the money, and proof is going to mean, bills, reductions from your bank account to pay those bills, payroll reports that show that you actually paid the people. That's the kind of stuff that you would expect that you would need to show.
And I would add just also what you just said. I think it implies current what you do with the actual money that you got. But I think as far as showing that it was used for a proper purpose. So for example, a mid-year bonus that was typical that you want to give, but otherwise looks like it may not be ordinary course of business for your business at the time because it's mid-year. So I would also say that if there are things that are, I just shouldn't say anomalies, but maybe not in the normal course of a business objectively, like bonuses or where it may be, that you have the historical data of having done that to show that is your course of dealing, course of performance, course of behavior for your particular business with respect to that.
You know, it might be good, Adam, if you would just go through the top line of the 75%, 25%, you know, some of the just basic guidelines on that.
Yeah, just the refresher crash course. You know, what using the example of $100,000 to keep it super simple. $75,000 or more can be related to payroll costs, and payroll costs is defined as gross wages, state unemployment, employer contributions to a retirement plan, and employer contributions to health insurance. What it does not include is employer Social Security taxes. The 25% is rent and utilities. Rent is defined by something that's related to either real or personal property at this point. So it could conceivably include a copier rental at this time. And utilities is broadly defined is the typical utilities plus telecommunications. And there was some literature in the sole proprietorship piece about auto expenses. Then the parameters around how do you get to the forgiveness amount is you have to have your head count back to what it was pre-crisis, and you have to have wages restored to at least 75% of what they were pre-crisis.
This follow-on question from Michelle basically also says, so what will the business need to show or prove that their PPP is forgiven? You know, the documentation required, et cetera.
Well, the bank's going to provide you the answer with, we forgive you. They're the ones that are going to be certifying that.
All right, next question. I'm not sure if this was answered, but we see a lot of orders pushed back and canceled in March and clearly saw our backlog disappear considerably. We received PPP and applied for an EIDL. The week period is July through August, and our argument will be that we have laid off people to save cash for later. We're now seeing some orders reappear. What do you suggest?
Can you reread the question? Reread the latter part of the question about the time.
Their week period, and I don't know what industry they're in, but is July and August. And our argument is that we would have laid people off to save cash for later. We're now seeing some orders reappearing. What do you suggest? This
sounds like one of the cases that Jack was talking about in the last webinar, which is, you know, if your gut said I would have laid people off, then you should do some scenario modeling that shows what your plan would have been versus relying on your gut if you're trying to button up why you needed the money.
Yeah, and I think that just to bifurcate that a little bit, yes, if the question is if we need to show what our intentions would have been, that's one question. If the question is, can we use the money for a period beyond June 30th or beyond the 8-week period, because of we really would have needed that money at a later period and not within that 8 weeks. Right now, the answer is no, but I think there has to be modification related to that because people have gotten their money or have not gotten their money, will get their money. And, you know, it's like, okay, what if we wanted to use that money for 8 weeks? We're beyond the June 30th. Maybe we wouldn't have hired somebody. So flipping that scenario around a little bit to maybe there's a ramp up over the summer or beginning of summer. Maybe they're somehow related to, you know, student, university, whatever it is, getting back into the fall semester. Then if there's a ramp up, then you might have increased your need for cash at that point. So all kinds of scenarios we can come up with that would indicate that there needs to be a loosening of the 56 days, the June 30th date potentially, I think.
Okay, next question is from Leslie. Some banks are using a prepaid penalty associated with the PPP. Is that specific to the SBA or to the bank?
I haven't heard of that yet. Jack, have you?
I have not, and I think that may be contra to what the requirements are under the PPP program. May be a violation, again, Jack theory, I don't know, but may be a violation of federal law of the program to charge that. And so would be interested in asking them where they got their authority to do that in light of the fact that these are not supposed to have prepayment penalties. Now, if they're talking about maybe converting this down the road, I mean, I haven't heard that, and I haven't seen that the banks have the ability to do that.
Yeah, especially because the interest was accrued regardless, I believe. So.
Right.
Next question from Andy. Any further clarification on what current economic uncertainty, in quotes, means? Does that mean that current as in I'm currently feeling economic pain, or I'm currently feeling uncertain about some point in the future? As you've all alluded many times, many of the PPP applications are eating off current backlog, but will feel the pain just months from now.
You got an opinion on that, Jack? You go first.
Yeah, thank you. That's a loaded question. So a lot of pieces to that. So it goes back to, so the first question in that was economic uncertainty. So what does that mean? And not to go through everything that we talked about on Tuesday, but in summary, it is showing that you needed the money in a sense that you didn't have other ways or other economic means to provide for the stability, the economic stability of the company. Then you start throwing in variables like, okay, I have an untapped part of my equity line, letter of credit, whatever it may be. Is it fair that you, because you have that capacity, that you have to use that? The other thing that we talked about the other day was, let's say you have a smart business owner or a conservative, a fiscally conservative business owner that instead of taking that nice vacation or buying that boat or something else and using that income, that net income that was rightfully theirs, reinvested that money into the business, and it's sitting there in a bank account. So at all optics, they have liquidity. Is it fair to hold them to use that money? So, and that kind of goes into the discussion about what do you need to prove, and doing the economic modeling and forecasting that if you didn't have that cash, what would that mean? Where did the cash come from? Why is it there? If you, it goes into questions of, if you knew at the time that you took out this loan that there was going to be this restriction, would that have caused you to terminate people so that they would go seek unemployment with the additional $600 and therefore conserve your cash as the business owner to be used at a later time? Because all the while, these past several weeks, you've been paying out salary potentially with the thought that you were going to get money, and then it would be that loan would actually be a grant and be forgiven. So I think there's a lot of presumptions that went into this program that are going to have to be revisited in order to make it fair and align it with the intentions, I think, of the creators of this funding source for its particular purpose, which is to primarily help employees with maintaining, their households, but also to give companies a fighting chance of recovery. And by doing what they're doing without providing guidance, I think that it is it's driving us all crazy. And there has to be guidance that will be coming.
Yeah, I tend to agree. I mean, my gut is telling me that if you just think of it in terms of your fiscal year, demonstrating that, hey, at some point in this fiscal year, whether it happened in this moment or it happens in the future based on the nature of my business, I'd feel pretty comfortable checking, yeah, continued uncertainty makes it necessary for this loan.
And I just want to reiterate that from my perspective, this hammer that, today was the day of reckoning, now it's next week, is really focused on, I think, again, Jack theory is that, but also others share this that I've read articles, that it was focused on the larger companies. That people are saying it's publicly traded, but there's large private companies out there that took money that didn't necessarily need it because they do have the funds in their bank accounts. They do have the liquidity, but because they fit within the formula without applying this economic need standard, I mean, it was always kind of there, but it really wasn't, there wasn't a limelight of focus, a highlight on that part of the whole program. And so I think that that is the focus, and fraudulent intent, that maybe knowing, is there a knowing component that is implied or put into the mix that, well, your CFO should have said, hey, we probably don't need this, and there's this little provision in the program that says we need to have an economic need. And so this is the period of penance that you get to give the money back if that's where you ended up. So then, and then we talked about on the other end of the spectrum, it would be very simple and easy to show the economic need just based on the financials and doing some analysis. So really, where a lot of us are stuck is in that middle gray area, which is, okay, what do we have to show? How do we show it? And then what happens if we made a mistake? What happens if after kind of going through the second analysis, a more in-depth analysis, end up on the side of maybe we shouldn't have asked for these funds? I think that the business judgment, the good business judgment, and having a good faith belief into whether or not you're going to get in trouble and get, again, Jack theory. I just think that there's too many things that weigh in favor of saying that you're not going to get in trouble. First of all, the capacity of the federal government to prosecute. They're not going to come after the little fish. They're going to start with the people that they think were purposeful and that have a huge target on their back. And so by the time they just don't have the capacity to go into smaller businesses unless there's a red flag for that. I think that there will be an algorithm developed that will, let's say it's 10 factors, and they throw the loan applications through the wash through these 10 factors. And if you get through these factors, then you're good to go. If one of them throws up a red flag, then it's subject to further review. And even then, you may not be in trouble. You may be like someone at the IRS or at the Treasury at the SBA says, yeah, okay, I can see where they would have thought that it was okay, but we're going to tell them that we really don't think it is okay and that we'd like for them to give the money back, maybe. So again, we're in a realm, a world of a lot of speculation as to the what ifs. And as we've said many times, we'll wake up tomorrow and something else will change.
Next question, and it's basically the same old question according to them. Do you think that they will extend the forgiveness period? Does it make sense to anyone that the states are closed, clients are closed, that we bring back all of our employees? Have you heard that they might be adjusting the 8 weeks to the time period when the state or states that you operate in?
Not yet. And I think that's going to be I don't know, because there's a case for and a case against. I mean, the case for is obviously can't open up. The case against it is twofold. One is, well, yeah, that's the whole point of me giving you a loan in the first place, is to employ people while we know that you're being harmed versus employing people when you're not being harmed, which is in recovery. The second thing is, what am I supposed to do when I have operations in North Carolina, South Carolina, and Georgia? I've got, and it was one loan. How do I demonstrate, well, South Carolina and Georgia might have been fine, but North Carolina was not, based on us reopening? So I don't know. I'm wondering, I'm wondering if that's going to maybe be more industry specific. I just don't know at this point. Jack, you got a thought on that?
Yeah, I would agree. I think it is industry variable. I think it's geography variable. So, you know, with Uptown Charlotte being 10 miles away from the South Carolina border, there are going to be different standards. I would hope that there would be some sort of communication to make it congruent or similar, to avoid the economic disparity and having to deal with those kind of issues. And, you know, it's kind of in each state's best interest to do it along the same lines, because this North Carolina government doesn't want all of us North Carolinians going down to South Carolina. I'm sorry, kind of bad enough that many of us go down there to get gas for 20 cents cheaper per gallon. So they don't want us going down there and getting haircuts and getting food and that kind of thing. So they, I'm hopeful, but it also, there are objective standards that, you know, are beyond kind of our conversation today, as far as these phases and what does it mean, and what geography are they having a harsher issue of COVID-19 in Rock Hill versus in Pineville. So we just don't know. But I also see it, I can see arguments on both sides as well.
This next question from Chase goes back to a comment you made earlier, Adam, and it says, is email correspondence for rehiring an offer to employees and their response of declining sufficient?
I would think so. I hope so. Jack, you got any thoughts on that?
Yeah, it goes back to documentation. I mean, it's offer is made, offer is either accepted or rejected, and documenting of it. So
this is from Leslie. What specifically will be required to show the bank or the SBA in order to get the forgiveness?
We don't know yet, but it's where we go back to, you know, so went the application, so goes the forgiveness documentation. So you just got to assume it's going to be the same. You know, if it was payroll records going in and health insurance bills and a copy of your lease going in, you got to assume it's going to be payroll records, copies of paid bills, and copies of paid rent on the way out.
and I will give a unsolicited plug for an email that you guys put out earlier this week, which has kind of like the beginnings of a list of what documentation you should be thinking about. Some of it's common sense as far as financials go, but others are, again, as we talked about, showing what the historical pattern of your business has been versus what has happened now and what the variable is. And then also using your crystal ball to say, okay, the what ifs, if certain variables happen a certain way, I would suggest, as I did the other day, you need to have the same, you know, like any experiment, you have to have the same set of variables, and then monitor which variables you're modifying in order to, once you get the results, you know what variables have changed, so you can justify whether or not that was a valid experiment, essentially. So do that. And then also what a suggestion is to create a physical, meaning a virtual electronic file folder on your desktop or wherever, and start organizing this information so that you have it ready to go and you have an inventory of information. You may not use all of it. You may not have everything that you need, but it's a good head start as to what you may have to submit down the road. I think that there will be guidance that is given to us as borrowers, but also to the banks. Right now, and I just want to reiterate this point, is that all of the liability is on us as borrowers versus the banks. It's very clear that short of having something just bright light in their face and they said, we're going to look the other way as a banker, then they have immunity pursuant to this program. So it's up to you guys. Now, is it in their best interest to look over your shoulder and find and kind of help you get through that process so that they don't have a problem on their end with respect to being the lender and now having to say, give us back the money or else. So I think there's that reality, but you know, it's all on us as borrowers to get our evidence and analysis together for that day of reckoning, which may or may not come for all of us.
This is a statement from Greg regarding his EIDL grant. So he got $10,000 from EIDL. It took 21 days. He filed on the 31st of March and just got it on the 20th of April. So thanks for that clarification and experience, Greg. Next question, should I recognize PPP income on a monthly basis even though I don't know how much is going to be forgivable, or should I wait until I find out how much was forgivable?
I feel like that's 6 of one, one half dozen the other. You know, whether you do a journal entry once upon forgiveness, or you do a journal entry as you go, I don't think that's going to matter from a financial reporting perspective, because you're really just looking at, you know, what's my operating burn rate. You know, technically correct would probably be as you incur the expense that you believe is forgivable, go ahead and relieve the loan amount, but I don't know if it matters that much.
All right, this is from Joe. Sorry if this has already been covered, but assuming the cutoff is still June 30th and you only got your loan, say today, thanks Cabbage, because I remember your situation, Joe. You don't have 8 calendar weeks to use it all. Is that right?
No, the way that it reads is that the period of the ability to obtain a loan was through 6/30. So if you got your loan and your 8 weeks goes beyond 6/30, you just are beyond 6/30, we believe, the way that it reads at this point.
Yeah, and I think a caveat to that is, though, I think that the 6/30 date is also relevant for rehiring people.
Right.
And so I suspect that, again, to align the intentions of these programs, that they're going to have to extend that as well, because otherwise, well, I have to spend money in 4 weeks and rehire everybody, but you're not getting the benefit. The people who receive the funds later in time are not getting the full benefit, which is inequitable to the people who received it earlier on. And so if we're going to make this fair for everyone and have everybody kind of go through the same process and actually get the benefit of the 8 weeks, I think that that is going to have to happen, which is it's a true 8 weeks, and also that the rehire deadline is likely going to get extended.
Tom, you get the most interesting question award for the day so far, because I haven't seen this one yet. So in several places in the PPP application process and closing documents, they mention a pledge to buy American products. Am I missing something, or would a new computer count in the money spent from PPP funds as forgivable?
No, no, that's not a forgivable element. Who knows why they put that crap in there? So
yeah, and the likelihood
forgiveness is just more like, buy American, peace out.
I am not aware of any computer, and I'm sort of a nerd, but I'm not a nerd in like engineering, anything like that, but a computer that is purely American parts only inside of it. So, if we're talking, and I know that there are ratios and percentages of what, it doesn't have to be entirely made in America to have that stamp on it, but I hadn't heard that, and I can't imagine that would be a relevant factor.
This is from Nick. Our company contributes and accrues funds for a 401k plan through safe harbor provision. Can we change that percentage to be sure we use the max funds in the forgiveness calculation?
I think so again, I wouldn't change anything right now, but I think you're in a little bit of a dicey situation on that one, simply because it's not demonstrating. Sure, it's allowable, but you'd have a hard time going before the judge and saying, yeah, I know that we were at, this profit sharing percentage, but in the middle of an economic downturn, we decided to max that out at 25%. Independent of, there's also a notice requirement to give the employees. So I think the extent that I probably would take that would be, hey, if you normally paid the payment on the 5th, maybe pay it on the 1st, if that's within your window, but I probably would not monkey with the percentage. I might restore something if I'd suspended it, but I wouldn't necessarily monkey with the percentage.
Yeah, I would say the same thing. I mean, when I hear something like that, I think about, Lost in Space, Danger, Will Robinson, and my arms are flailing everywhere. So just be careful with that. And you need to show a pattern of behavior. Like Adam said, if it's within a reasonable window, but if you're accelerating a benefit that really you're going to have a hard time justifying, and it just looks bad, follow your gut, because you're probably, by asking yourself that question, then you may be able to come to the appropriate answer for you as to whether it is proper or not.
Yeah, I'll give you a good example just from a call that I had with the client yesterday. Love his controller, and his exact comment was, in her desire to get bills paid, she paid the health insurance bill 30 days earlier than it was due, thus it was not in the period. And my response was, well, then that is your ordinary course, isn't it? So just keep doing that. You should be fine.
Okay, next question is from Ray. Just got PPP funding in my account today. Congratulations. And if I start employees back on Monday, does the 8 weeks start on Monday or today? Or can I out one week before bringing employees back and then start the 8 weeks?
It's right now, it's the day you got the cash.
All right, Joe. Also, can additional safe harbor contributions be a way to use funds? Does it have to be historically demonstratable, or that is common? I think we hit that one.
Yeah.
Joe, could you call the employee on a recorded line when you offer them the job to come back and they refuse? Full disclosure up front.
Right now it says written, so I don't know. I mean, I guess if you had a call transcript, what do you think, Jack?
Okay, so that goes into wiretapping issues and things like that, right? So and it depends. And the technical answer is it depends what state you're in, whether you can record a conversation, even if you're only one of two parties. So without getting into that, to your point, right now it does say written, and that's kind of the best thing to do, even if it's just the email communications. The best thing I think you can do otherwise is just take contemporaneous notes of the conversation. Even then, that isn't as good as having something in writing that goes through a server that you have. Now, the phone call conversation, well, I can't tell you not to. I can't control your behavior if that's what you so choose, but I don't know how useful evidentiarily that will be.
All right, this is from Elizabeth. Just tuning in, not sure if this was addressed, but wondering about the new talk of proving companies needed the PPP money. Before we got funded, we did tap our line of credit just in case. Now that we got funded, I don't need that line of credit. Can I pay that off for now, or will it look like I did not need the PPP money?
Rewind about 30 minutes ago. Jack nailed that one. Basically, it's ultimately going to come down to whether you ended up needing it in the sense of experienced economic uncertainty, we think.
This is from Mark. Would retirement plans include payment to cash plan or cash balance plans or profit sharing plans?
There's nothing that says that it doesn't, so you would fall back to the earlier guidance that we had around don't do anything different. But very specific to that topic, because we had some of these on the other webinar, the only challenge you're going to get in terms of the cash balance and the profit sharing plan is that's typically, a calculation that's based off of how did the company do in a year, and we're mid-year. So unless it's the 2019 number that you're funding in this period, that's going to be a tough one, I think, to even get somebody to take the money and do the calculation. And even if it's the 2019 number, your dicey area is going to be, man, if you always made that in September and you pulled it back to here, you need to have a good reason why you did that. Even it's allowable, but that would be something that if I was auditing it, I would have a question about.
This is from an anonymous attendee. What if you're a small business that was not affected by COVID and did not lay anyone off or lose revenues as a result? Will the PPP need to be reclassed from a grant to a loan?
I think that goes back to whether or not you requested forgiveness. So if you did not request forgiveness, it is a loan. But if you requested forgiveness and it was denied based on whatever guidance is out there, then it would be a loan as well.
Yeah, and it goes back to the fundamental question. It sounds like maybe this company or this person didn't need the loan funds to begin with. So, demonstrating the economic necessity. And I think that, right now the $2 million is a benchmark, but if the loan amount was over 2 million, that's going to be reviewed likely. And then if it's under 2 million, you may still have a problem if you cannot demonstrate the economic need. So for me, that's kind of a two-part question as to should you have sought the loan. I think what I understood you to say is that they weren't sure at the time, maybe that was the prior question, but so now analyze the economic need, and then on the backside, the forgiveness part of it. If you don't use it within the guidelines, the guide rails of proper use and proper timing, then it would revert back to or be a loan because it's not forgiven, it's not a grant.
You want to hit that timeline of when that loan, because it's shifted, those goalposts have moved as well. You want to hit that real quick, just as a reminder?
Well, the give back the money, no questions asked moved from the 7th to the 14th. But in terms of the forgiveness request, there's no guidance on when you can first request forgiveness. So you would assume it would be as fast as possible after 8-week period, because within the law, I believe it's within 60 days, the bank has to authorize, like approve or reject the forgiveness amount.
And doesn't that loan have to be paid back in 18 months or something like that?
Well, it's 24-month loan. First 6 months are deferred, so it's effectively an 18-month loan.
Okay.
But interest continues to accrue during that 6 months. Just a point of clarification.
All right, great, thanks. This is from Leslie. If you actually maintained your staff, will you have to show a decline in AR, sales, or cash flow to prove that you needed the PPP?
I think that's part of the documentation you should be putting in the desktop file, as Jack has talked about.
This is from Karen. For a self-employed person or a partner in a business with employees, the PPP loan amount treats the SE income of the owner and partner as payroll costs in coming up with PPP loan. For the spending to qualify for forgiveness, do you think the ratio of payroll cost between employees' wages and the self-employed income needs to be the same as in the 2019 base period?
So start with the $100,000 threshold first. I mean, I think whether you were on payroll or whether you were doing distributions to or draws to yourself, as long as you're following what you have historically done, you probably would be safe. And if you're not, then you should have a reason why you modified it.
Next question, has the SBA or Treasury given the criteria to the banks for forgiveness as in forms, et cetera?
I was on a call with PNC the other day, and that answer was no. Have you heard anything, Jack, one way or the other?
No, have not.
This is from Tom regarding my SBA EIDL story. Applied for it 5 weeks ago, received in the mail to go to a portal where it said I could get up to 300K. Received email 2 days ago to sign docs in portal. 300K was deposited in my account today. No mention of advance, never spoke with anyone, just have copies of docs that I signed.
Okay, that's great.
Yeah. Miriam, yesterday I received PPP loan. I have an LLC as an occupational therapist doing home care with kids under 3 years old. I get paid per session. Our work was suspended for a few weeks by government rule, and therapy services have been resumed via telehealth until further notice, but most families have declined service. I'm working about 20% as much as I was. Can I pay myself my former salary and rent for my home office?
Yeah, I mean, that was the intent of the program. I mean, that's no different than a commission-based employee that can't make a sale, or a tipped employee that can't generate a tip. So that was the reason to include the self-employed in the first place.
And it goes back to, again, showing what it was at this point last year, the comparative data. If it's something that hasn't continued or it hasn't dropped off just a little bit, but pretty significantly, you have to show, I think you're going to have to show what it would have been like under certain circumstances using historical data. And it may be looking at 2019, 2018, 2017. We don't know if it's a 3-year average or you know, is it the median, is it the mean point, whatever it is. We don't know yet.
Okay, just as a matter of housekeeping, it's time check. It's 11:58. Just for those who had an hour blocked off, we've got about a dozen questions still in the queue. We will continue to go on, and if you have to lop off, we will post this on the BGW CPA YouTube channel later on this afternoon, so you can finish the entirety of this webinar. We're going to keep rocking here. Tom, if we don't use PPP for payroll because we're closed, can I still get forgiveness on the rent if it's less than 25% of total PPP loan?
No, the whole point was you were supposed to spend the money on payroll.
This is from an anonymous person. What happens if you have part-time employees that have fluctuating hours? Do you have to pay each employee the same amount for 8 weeks, or is it the total payroll amount that has to remain the same?
Separating out the pay cut piece, because, you know, if you had reduced hours, does that represent, you know, less than 75% of what I made pre-pandemic? You'd have to look at that piece. But independent of that, it's total dollars spent, and where the fluctuating hours comes into place is in the average FTE calculation component.
This is from Shelley. I received PPP on Monday. Is there a recommended rate for stipend for employees that are not able to work because of childcare? I have an employee whose husband is an ER doc, and we felt it would be safer for her to stay home. His caseload was stable to be covered by other employees.
I mean, you know, presumably what they got paid before.
Yeah, and there seems to be a intersection with paid leave and that kind of thing. So, you know, whatever if there's a program with the employer, then that should also be considered as whether or not that has some influence over the rate of pay, or if there should be some requirement that is counted as paid leave, because medical paid leave for whatever reason.
Next question. We supply the commercial construction trade and are not paid until we ship material, possibly long as 18 months after booking. As such, financials through April are actually ahead of 2019, but we know that it will soon drop substantially. So as we're halfway through the year, the impact of COVID on our business may not be as bad this year as it will be in 2021. Do we face risk if we spend the loan money and then end up having a better year than 2019, making all or any or all of the loan amount for unforgivable? We need the money to keep headcount, but we do not need it to survive the next 2 to 4 months.
You gonna hit that one, Jack? Because you've done a way better job on that one.
Oh my gosh. Loaded question. I mean, it is, oh boy. Where to begin? Go through the highlights of that question again, because I feel like,
yeah. So they supply commercial construction trade. They're not paid until they ship material, and that can be up to 18 months after booking. Right. So financials right now are looking good and ahead of 2019, but they know that they're going to drop off substantially. So they're halfway through their year. Impact of COVID on the business may not be as bad as it will be in 2020 as it will be in fiscal 2021. Do we face risk if we spend the loan money and end up having a better year than in 2019, making any or all of the loan amount unforgivable?
Well, it sounds like there's a potential risk of payment because they're getting paid at the end. And so I don't know if that factors into the analysis in that, okay, and then as far as progress payments, I mean, obviously they're doing something prior to having the complete product. And so, you know, recognizing that completion point, that progress point, milestone point for purposes of, okay, how are you really doing at this point? But I think that the fact that if there's it sounds like they're making certain presumptions that, yes, they're going to get paid down the road, having produced this and putting it through the machinery, et cetera, of production. So the reason why I wanted you to ask that again is I didn't want to punt it down the road, because I think that there's a lot of variables and guidance that will factor into the answer to that question. But I think that those are maybe kind of some of the variables that are going to go into the analysis that might not otherwise influence the analysis of need year to year, because of the fact that you're getting paid at a later date in its entirety. And I don't know if that means that maybe you get paid, if it's possible to get paid progress payments versus at the end of the production cycle for that particular product or service.
This was from Andy. Good feedback on increasing 401k match or profit sharing percentages, but how do you feel about hazard bonuses? I've heard opinions that hazard bonuses would likely be supportable for forgiveness.
I mean, I have not philosophically had a problem with that as long as it's not egregious.
Yeah, that's an interesting scenario. Hazard, and are they talking about the hazard of the fact that they are as an employee going into an environment and the general risk of being potentially infected just by being closer than 6 feet to someone else, or the fact that their employer maybe hasn't done everything they might be, you know, the employer has not done everything that they might otherwise do. So I think that is one of those depends questions. If it's something that, for whatever reason, so let's say first responders, you know, should first responders be entitled to additional pay because they are hour by hour potentially in the throes of danger? So I would think that potentially that may be compensable, but you think about what do the extra dollars represent? So what is it that is it the fact that we're asking them to put themselves in the line of fire, literally, and potentially taking that home to their families? And so is it an incentive based that we want to provide this to you to incentivize you to come into the office, essentially into a high risk environment? So I think there is a bifurcation as to what the hazard is, meaning kind of ordinary hazard that we all have by going into the office, going into Harris Teeter, versus being in a work environment that is truly much more hazardous because of the activity. If that makes sense.
Next question, if I reduced my employee's salary by 25% for 2 payrolls and then restored it once the 8-week period started, can I pay them back the 25% by 2 that I reduced, and this amount would be forgiven, assuming they make up to $100,000?
I think that's the way it works, right? I mean, as far as having, and I think that goes into the June 30th date, which again may be extended, that you have until that time. Most extreme example would be on June 29th, doing that restoration, which is bringing them on board, paying them back pay. But at that point, what's the justification for doing that? I don't think they look into that, but it's like, well, wait a minute, you're paying somebody for, we know they've been sitting around doing nothing. And then I think you have to coordinate that with were they taking unemployment benefits or not. So I think, I mean, correct me if I'm wrong, but I think that that is currently what the rule is.
Yeah, the timing window, it's silent on, you know, if you restored somebody the entirety of their salary, should you, in theory, offset that against the unemployment benefit they received? That it's silent, but you could see them asking about that at some point.
This goes back to the question that Joe had on getting something in writing. And he said, full disclosure would mean that I would tell them up front at the beginning of the call. I get this all the time when I call companies. Written is obviously better. I agree. So any clarifying thoughts on that one?
He's basically saying that the first thing out of his mouth on the call is, please be aware this is being recorded for any purpose down the road. Once you do that and you get that person's consent, then it's a consensual recording versus being a covert recording. So again, what we talk about is not legal advice, it's more guidance, because it could depend on the situation, could depend on what state you're in. But generally speaking, if you have consenting participants to a conversation being recorded, that's why when you call up your credit card company, they say that, you know, and it's agnostic, meaning that everybody who calls, no matter what state they're calling from, gets that message. So that is, you should be okay doing that, because the reality is they can hang up the call, they can hang up the phone if they don't want to. You know, that's definitely showing they are not consenting to it. So.
This is from Mark. When do we request forgiveness?
We don't know yet, but again, from the earlier question, I would assume that it's going to be when your 56 days is up.
This is from Sean. Can you review the 2019 date range so that that can be compared to the 8-week loan time frame? I think you said February 15th through April 30th.
No, it's one of 3 options: your original application period, B, 2/15 through 6/30/2019, or C, January and February of 2020 is the way that the law reads now, is you pick one of those 3.
With the theory being that if you were not in operation in 2019, then you have that period of time in 2020 as comparative data as to what it is. But I think numerically, you would want to use 2019 because it's a longer period of time, and also likely when you were up and running versus 2020, where you may be starting your business, maybe not up and running fully. I think there's some of the theory behind those dates.
This is from Kevin. We have one employee that's requested reduced work from home status, working roughly 15 hours per week and not collecting any unemployment compensation. This represents less than a 25% reduction in overall payroll. So I assume we're okay. Would you concur?
Yeah, I mean, as long as you haven't reduce them below 25% of what they had been making previously, you know, you should be fine. Instead, I think it's going to be a little bit sticky on people that were hourly employees. You know, how you would determine that.
Yeah, and I think you have a couple different concepts kind of converging, which is the unemployment context. But he said that not collecting unemployment. So then, and you look at the 25% factor, not reduction. And so it seems like you're in the money essentially for that particular employee.
This is from Marion. If a small amount of money is left in PPP funds at the end, do we need to pay back what's not used?
Yeah, I mean, ultimately it turns into a loan, and we've heard, you know, the law reads that it's supposed to be a 2-year loan, and we've heard that some banks are going to request for the entirety of the payment for whatever wasn't forgiven, but I don't know if they're going to be able to do that or not.
Okay, this is from James. We're an essential business, so we have remained open and are producing and shipping parts, although our sales are down 25 to 30%. If my uncertainty was predicated on having to lay people off to remain a profitable business, is that a sound basis for certifying need?
Yeah, I mean, that's the whole point. It's just that, as we discussed at the beginning of the call, you know, your gut probably would not hold up in court. So this is where, you know, at some point you're going to want to spend some time scenario modeling what that would have looked like, so you can demonstrate out what you would have done but for not receiving the money.
There are a lot of people out there that did the what ifs. They said, well, just in case, I need to have this reserve. And then so what the government is allowing those to do is to take another look at and what has come to fruition, what has been the reality. And if, you know, again, I think that you may not get penalized or prosecuted for it, but if it turns out that you really didn't have a need for it and you're able to survive without this money, or maybe you didn't even use it, it was totally a reserve for you during this period of time, and you might consider having, you know, whether or not you have to give the money back or not. But that goes into the scenario that we've been talking about the other day and today, which is what happens when, yes, you didn't need the money necessarily, or maybe you used part of it, but it was, you know, the fact that you thought that using part of that would save cash for other reasons. So we're talking about a couple different concepts, which is the forgiveness of it, whether or not you can actually keep it, and whether or not you had a good faith intention in seeking it in the first place. So it's kind of in reverse order, but you need to go through that analysis. To Adam's point, what we've been discussing is it's documentation, and you got to be able to tell your story and prove it.
Yeah, and when I think about, all right, what would be a scenario where that would be a tough, you know, that would be a tough one, and I could see someone saying you didn't really need the money in retrospect, therefore either return it or it's taxable, assuming that they do something on the tax-free side of the house. Would be, you know, whether it's an insurance company, software company, or, you know, something where a significant revenue component is annual recurring revenue that you're still collecting, because there's been no drop off in cancellations or anything like that, then that, to me, that's the scenario where, all right, well, I really didn't have any harm. You know, probably something should be done with that. But those truly are really the only scenarios that I can really wrap my head around in terms of the ability to predict, you know, economic uncertainty one way or the other. Is it, look, you know, if I get a statement from my insurance carrier of number of active policies and payments received that month, and I'm not seeing a drop off in cancellations, I don't know. I mean, those are the only scenarios that I can think of. How about you, Jack?
Yeah, and you think about things, the changes of business. So for example, you're a business that was doing X, and then you started doing Y in response to the COVID-19 crisis. So it may not be your core business competency, but you've adjusted, you're making income that maybe you didn't know that you're going to be. So you had the justifiable economic need at the time, and the reality may not be as harsh as you thought it was going to be. You know, for whatever reason, the government authorized the use of, you know, this is a bizarre example, but you know, certain masks that you can produce them, or you are a chemical producer and you had no thought in your mind that you'd be able to produce hand sanitizer based on the chemicals and the processes and the machinery that you have at your plants. So those kind of things, I think, create variables to what may be a standard analysis for economic need.
Well, thank you to everybody that attended this webinar. We had 149 people on this one today. So great job, Jack and Adam. As always, if anybody else has any other questions, get them now or forever hold your peace, at least until next Tuesday, because I think we'll be back again.
Hey, Gary, can I make one comment that, and I know we're focusing in before everybody starts leaving. I've had clients come to me, business owners, and say, I know this is not my problem, but I feel like this is my family and I can't do anything for the independent contractors. And so a really good resource that I found is on the North Carolina Department of Commerce website, and it deals with this pandemic emergency unemployment compensation. And there's kind of 3 different programs. One is for those independent contractors that don't qualify for unemployment insurance because there's no employer. And so there's a supplement for that. There's a supplement for those that have received the benefit of unemployment insurance, but this is kind of a supplement to that. So there's a couple of resources that people can check out as employers on behalf of their employees, or at least direct them to. And so I would suggest that, you know, if you're one of those people that wants to provide some guidance to your independent contractors, that you check out the North Carolina Department of Commerce website with respect to this. They're calling it PEU or PEC, Pandemic Emergency Unemployment Compensation.
Man, I'm glad you brought that up because I've heard that too. So thanks for bringing that up, Jack. I really appreciate that. And we did get a bunch of folks that wanted us to send them that traveler's document, so I'll get on that. This, again, will be posted this afternoon, and I think Jack's firm, Shumaker, will probably be putting that up too once we transfer the file over to them. So thanks again. I hope you have a wonderful day. Enjoy May the 7th, and I hope that it's a sunny day wherever you are.
It is sunny. Thank you.
Yes. Thank you. Stay safe.
All right.
All right. Take care.